I guess what you're asking here is there's a debate on spending time in the so-called developed world versus the so-called emerging markets, right? Because generally speaking, I know Indonesia is kind of like a notable exception, being a relatively high tax jurisdiction. But next door, you have Singapore, which is obviously much lower tax. And Malaysia is a quasi territorial tax regime as well. So your lower effective tax rate you tend to have a lower effective tax rate in Malaysia than you would have for a similar operation in Indonesia. Of course, you have Hong Kong, and you have really competitive tax regimes in the neighborhood, right? So Thailand as well, they have a relatively attractive regime for people who earn money outside. So then the question is, why move to a so-called developed country like the US, like Europe, when you can choose a relatively low tax jurisdiction in the emerging markets? I think that is a matter of personal choice, obviously. Generally speaking, don't, even though I'm a tax practitioner, I work with clients and I say, don't let the tax tail wag the dog. It's about what you and your family want, wherever you want to be, and we optimize for that situation rather than just running to the lowest tax place you can find. And you may or may not be happy there. And for a lot of foreigners that we work with, that's where Bali comes into play. People fall in love with Bali. It is a part of Indonesia. They didn't know that before, but it is a part of Indonesia, which means it's not a low tax jurisdiction. And if you want to do things properly in Bali, it means that you're going to be paying over a fair chunk of your income to the Indonesian tax authorities. And it's just the price of living there. If you try to circumvent that, you can get in trouble. And there have been instances where certain individuals, especially within the social media influencer space, have stepped on the wrong toes. And that was one of the facts that was thrown at them, that they're violating immigration rules as well as tax rules. So my advice again goes back to when we're talking about jurisdictions, just figure out where you want to be, do the right thing. You can optimize, but don't mess with the governments in question. So I don't subscribe to this just chasing the lowest tax jurisdiction. And when it comes to the US and Europe, again, like Indonesia, it's a pretty high tax jurisdiction you're going to be moving to. But for some people, it's worth it because of the nature of the business you're trying to build. Maybe the talent pool is kind of shallow here in Jakarta, and let's say in technology. So therefore, where is there an abundance of technology talent outside of Jakarta, Singapore, but also the Bay Area, California. And California also happens to be the state in the union with the highest level of tax. But it's worth it because of the potentially unlimited upside in terms of being able to expand and build your company. Similarly, if it is that you're looking for investors or you're looking for an exit, the capital markets in certain other jurisdictions tend to be more developed. So you're chasing that as well. So there are a number of non-tax reasons that make it all worthwhile, I think.